Thanks for checking out this week's FinPrep Trading and Investment video newsletter. Pretty interesting week here. So second consecutive December where we've had an increase in the discount rate, courtesy, of course, of the Federal Reserve. What is interesting is price on Tuesday here posted up right along this trend line we discussed in prior week's videos. This off the 420 highs, capping in much of this summer rally of really sideways consolidation to new all-time highs. But again, you'll see price basically capped along this trend line. And where did we go? Of course, really functioning as resistance at 228 as mentioned in prior video, and a sell-off, a slight sell-off, ever so slight really, on news of the increase. What's interesting here is, of course, the ultra-fast stochastic. Last time we had about an approximate 2 to 3% pullback in the rally off the SPY. It, needless to say, was the preface to a much more considerable increase. Question here is, will history repeat itself, right? Now that we're getting the pullback on the ultra-fast stochastic down to close to oversold levels, may pull in deeper, perhaps to the rising 20 around 122, where we had our pretty significant breakout. Even if it doesn't quite get there, the question is, can we truly take out this trend line off the 420 highs into really sort of new all-time highs, and even that of breaking a trend line which was previously resistance? That's one pretty doggone interesting question to look at in the week ahead. The Dow DIATF here, of course, mentioned round number resistance at the 200, and high of day was very close to that across multiple days here this week. So pulling in just ever so slightly there on DIA, not quite as significant as we see in other indices. QQQ NASDAQ, on the other hand, did take out that 120 level that we mentioned on last week's video with just a slight breakout, and then quickly now here we are retesting the 9 EMA as well as essentially the breakout point of approximately 119.50, call it 120. So question here is, of course, even if this particular breakout itself pulls in a little bit deeper, perhaps to 117, the 50-week moving average, 50-day moving average, nonetheless, just the fact that it did successfully take out that 120 level, another go at that would probably, quite possibly anyways, leave it to dust, which would be very interesting as NASDAQ here has been consolidating for approximately half a year since August. So NASDAQ's taken its breath, whereas other indices have moved ahead. So interesting here on the trannies are forming what's arguably a bull flag. We've seen these break and pass, so nothing to jump to too many conclusions about. But you're pulling into your rising 20-day moving average, so pretty interesting here on chart on the trannies, and deeply oversold in terms of the ultra fast stochastic in either case. So small caps, on the other hand, Russell, IWM. Again, we had this nice long price channel stretching back to March of this year, and a slight breakout above it off this, these upper trend lines functioning as resistance to price, particularly similarly to SPY right in through the summer months. And so here we are now, price resting above the top of what was resistance in terms of that trend line. So any hold on here is pretty bullish for small caps, and of course we have oversold on the ultra fast stochastic. TLT Treasuries 20-year plus did lose about 3 points here on day of the announcement, as would arguably be expected, although event risk really can create its own movement regardless of whatever narrative one may choose to use as an interpretation of price action. All that stuff aside, let's listen to the chart, and the chart is essentially chopping around here. Your shorter term 9 and 13 EMAs really kind of capping rallies, but this 116 level being so pivotal and past anyways, stretching all the way back to 2011, really being the support here would be the potential third touch within this very strong uptrend on TLT here. So we would, needless to say, quite oversold on the stochastics and on the weekly and daily basis. And then just kind of treading water here on the daily, which is interesting, though price is moving sideways. So we'll see what to make of that. But looking for a potential hold of the 116 going forward. Dollar index, of course, breaking to new highs. So we had our basically blow off top here back in March of 2015 and been chopping around since. And so basically what we have is over a year and a half years price range, and here we are back at 26, above 50, which stretches back to about 09. So UUP dollar index, again, heavily weighted in the euro, but breaking out of this very long range, making its real run off kind of that Jackson Hole time period. And here we are into the hike. So as would be expected, but still overbought, and we'll see how far, if this needs to pull in. Gold similarly then did take out the 110 trend line as a result of, again, that news risk item there on Wednesday, and right off the 9 EMA breaking down and seemingly trying to recover. We'll see if it can really try to recapture this 110, but oversold in the short term, and we'll see how it lines up against the yen, of course. The junior gold miners, on the other hand, did of course break down. What is interesting here is just in terms of formation, you do have your fourth potential touch here along this downtrend, where basically gold miners have very much corrected much of their massive outperformance of the overall equity markets in general this year. So not entirely unexpected, although this is a pretty interesting zone here, very oversold. But again, GDXJ very much taking quite a hit, so 29 looks kind of interesting. JJC did lose that pennant, bullish pennant potential, breaking down. You have your 90 MA now crossing over your 20. So, but again, a possible retest of the 29. So any successful hold of the 29 here, this long-term trend line, which basically defines your bear market in copper off your 2011 highs, would be good. A hold here would be very good. A break, of course, calls the entire thesis of this being a potential false breakout into question. But could pull in its deepest 28 before seeing any action. We'll see. Yen, of course, similar to gold, just bearing that relation in mind, very eerie, but it is even on a daily basis. And again, pulling in, as we saw in prior weeks, pulling into the 90 MA and breaking, pulling in, breaking, pulling in, breaking. So not entirely out of the ordinary there. And then as far as the British pound is concerned, FXB, the ETF, which tracks price more or less, or seeks to, that is, currently holding the 50-day moving average, but most importantly, price hadn't broken out of what was arguably a bearish flag. So it is oversold on the fast stochastics on a daily basis, so not necessarily thinking that price continues down immediately next week, but should price continue to roll over, the pound, a retest of the lows and a possible takeout and move to new lows is a scenario worth examining on our estimation. So that's what we had last week, guys. Appreciate the quick video. Feel free to subscribe and keep checking us out. Hope this helps. Take